This code retrieves historical stock price data for specified tickers from Yahoo Finance using their API. It imports libraries such as NumPy, Pandas, and Matplotlib for data manipulation and visualization. The main function, getData, takes a list of stock symbols, a start and end date, and a data frequency. It creates a dictionary to store the open high-low close (OHLC) data for each ticker. The function first requests a Yahoo Finance history page to obtain a cookie and a Chrome essential for API requests. For each ticker, the function constructs a URL to download historical data, sends a GET request to this URL, and reads the response into a Pandas data frame. It cleans the data by replacing null values with nan and dropping any missing entries. The date index is converted to datetime format, and all values are changed to numeric types. The code initializes a list of tickers, such as PEP and KO, and attempts to fetch the data repeatedly until successful. Upon success, it extracts the data frames for KO and PEP from the returned data dictionary, enabling easy access and analysis of the stock data. This code analyzes and trades two stocks as part of a statistical arbitrage strategy using Pandas for data manipulation. It calculates daily returns for the stocks PEP and KO by comparing their closing prices from the previous 2 days, storing these returns in a data frame named pairs. The stock with the lowest return from the previous day is identified and recorded in the target column. The code then calculates the correlation of returns over a rolling window of 9 days to evaluate the stock's recent behavior. A purchase signal is triggered when the correlation drops below a threshold of 0.9. It checks for any unprofitable positions from the previous day, tracked by the holding yesterday position variable. If a purchase signal exists but there are existing unprofitable positions, the no-money variable prevents new entries. Subsequently, the code determines returns for each stock based on the no-money condition. If there is no money available, it assigns nan for no trade, otherwise, it checks today's return, using the next day's return when today's is negative. The returns are calculated based on the target stock, resulting in overall returns recorded in the returns column. Finally, the code calculates cumulative returns over time for executed trades, providing a running total of profits or losses in the cumulative return column to assess the trading strategy's performance. This code calculates the returns for Pepsi and Coca-Cola stocks over a specified period. It first determines the daily return for each stock by comparing the current closing price to the opening price and expressing the result as a percentage change. The buy and hold return for each stock is computed by measuring the percentage change from the adjusted closing price on the first day to the current adjusted closing price. Finally, the code averages the daily returns of both stocks to create a benchmark return and averages the buy and hold returns while using forward filling to address any missing data points, ensuring a complete time series of returns. This code visualizes and analyzes returns from a pairs trading strategy compared to a 50/50th return setup. It extracts the returns and cumulative return columns from a data frame named pairs, ensuring that missing values are removed for clarity. A histogram is created to show the distribution of returns with 50 bins, and the bar width is adjusted for accurate representation. One histogram depicts the 50/50th returns and the other illustrates the pairs trading returns, plotted on the same axis for easy comparison. Following the visualization, the code calculates various statistics for the pairs trading returns, including mean, standard deviation, worst and best returns, and the lower, median, and upper quartiles. These values are rounded to 2 decimal places and presented as percentages, summarizing the strategy's performance clearly. This code snippet calculates various metrics related to investment returns, focusing on risk and performance. It begins by determining the execution rate, which is the ratio of the length of the returns array to another array named returnBoth, providing insight into the number of trade opportunities acted upon. It then computes the maximum drawdown, representing the largest drop from a peak to a trough in cumulative returns, expressed as a percentage by comparing cumulative returns against their maximum value to find the maximum difference. The code identifies periods of negative returns by creating a mask to track these instances and filtering out brief negative periods that follow positives. It counts the contributions of negative returns, resulting in bad, which is the maximum percentage of negative drawdown. To assess the investment strategy's success, the win rate is calculated as the percentage of positive returns relative to the total number of returns by counting both positive and negative returns. Additionally, beta is calculated to reflect the volatility of returns in relation to return, both using correlation. The Sharpe ratio is then computed, indicating the average return earned above the risk-free rate per unit of volatility based on cumulative returns and their standard deviation. Finally, TRET is calculated as the last cumulative return percentage, representing the total return achieved over the investment period. This code uses the matplotlib library to create a plot that compares two investment strategies, buy and hold 50/50ths and pairs trading. It sets up a figure with a defined size and plots the cumulative returns of both strategies, scaling them to represent percentage returns. The x-axis is labeled time and the y-axis returns in percent, with adjusted margins for improved visual spacing. A dashed horizontal line at the y=0 level serves as a reference point. A legend differentiates the two plotted lines and the final visualization is displayed. Additionally, the code prints several performance metrics to the console, including cumulative return, execution rate, win rate, maximum loss, maximum consecutive loss, beta, and Sharpe ratio. This summary assesses the strategy's effectiveness and risk metrics, noting that the decline in returns since 2011 may result from overfitting and the lack of reinvestment of returns. This code calculates and visualizes the year-to-date performance of two investment strategies, a buy and hold strategy with equal allocation in PepsiCo and Coca-Cola, and a pairs trading strategy. The buy and hold strategy uses adjusted closing prices for both stocks over the last 252 trading days to compute returns relative to their initial values, averaging them and filling in any missing values with forward fill. For the pairs trading strategy, cumulative returns are calculated from a returns variable over the last 92 trading days. The plotting section displays both strategies' performances as percentage returns over time, with properly labeled axes and a reference line at 0. A legend distinguishes the two strategies, and the final performance metrics, rounded to one decimal place, show how each strategy performed as of July 1, 2020.